The stock exchange is in the naughty corner.
Yeah, the corporate watchdog, that's the Australian Securities and Investments Commission, has ripped the ASX a new one. ASIC reckons the exchange hasn't been upfront about the cost and complexity of an overhaul of its back-end technology system, which was last upgraded around the time Pong was released.
The TV fun game with extra features for everyone, youngster or pro.
The Clearinghouse Electronic Sub-Register System, or CHESS, is the bit that reconciles buyers and sellers. It's fundamental to the way the stock exchange works.
Why does ASIC care?
Because, despite what people think, the Australian Stock Exchange is not a government-operated thing. It's run by a $12 billion corporation which itself is listed on the stock exchange. You can buy shares in ASX Limited just like you can buy Wesfarmers or BHP or Seven West Media.
Move on.
ASX Limited is in control of ensuring transactions on the stock exchange are transparent and orderly.
In other words, liquidate 2 bricks of cocaine and park it right here.
It makes its money by charging a service fee to the 2,200 odd companies that are listed on its platform. And if you think that's like a cop taking a clip of the ticket from the drug dealer, you'd be right. One of the most fundamentally important tenets of a transparent stock exchange is something called continuous disclosure. A public company needs to keep the ASX, and therefore investors, informed of things happening in its business that could affect its share price.
And the ASX hasn't done that?
It failed to tell itself about its chess problem.
It's like my brain is facing my penis in a chess game.
It's considered a particularly egregious oversight because as the operator of the market in which it itself is trading, the ASX should be above reproach, what lawyers call a model litigant.
I will give you the best criminal defense that money can buy.
So now we have a blizzard of acronyms, with the ASIC saying to the ASX, WTF, investors have NFI about the CHESS.
Hasn't been away for some companies on the ASX.
Commonwealth Bank has just unveiled its latest profit. Close to $10 billion. And CBA boss Matt Comyn has spent the past 24 hours trying to keep a straight face when saying it's awful that mortgage holders are having to do it so tough. The bad news is the CBA results could be a portent of more pain for homeowners. The bank's about to issue a record dividend. Lots of that $10 billion in profit is going to be handed back to investors. Who holds bank shares?
Boomers.
The same debt-free boomers who are already benefiting from high interest rates because it's driven up the rate they get on their term deposits. Guess what boomers are going to do with the extra cash in their pockets courtesy of higher dividends and higher savings rates?
Go have some fun.
There's an interesting story behind this, nickel.
What does increased spending do in a constrained economy like ours?
Jacks up inflation.
Which forces up interest rates, which boosts term deposit rates, which...
Okay, I get it.
A pattern is something that comes in a certain order and repeats.
I'm Ben Harvey.